Hey everybody, it's Hussein Kabani, your favorite broker, and we are almost at the end of October 2025, and we're doing another market update. Just to give you guys a summary of what's been happening in this market here so far, year to date, we're about 11% off of sales compared to last year. The condos have been off more, about like 16, 17% versus freehold being off by about 7 or 8%. Either way, we are still down, and we're comparing to last year, where last year we actually had one of the lowest number of transactions happen. So we're actually going to do less transactions than that, probably by about 7,000 units or so by the end of the year. That being said, if we went back and we looked at pricing, say just in Pickering, and we compared September 2024 versus 2025, what we saw is about a 7% decline average in pricing. But what we also saw was about a 17% increase in number of transactions that have happened, and that was just in Pickering alone. So this goes to show you guys, like all the municipalities around Toronto aren't about the same. I would say that Durham is probably doing better than all of the other municipalities aside from Toronto. Toronto has always been a core staple, and it's going to perform really well no matter what, just because the inventory levels, especially with the freehold, are very, very tight. Condo sales, of course, they are going to be down quite a bit. The flip side to that, as I've been preaching about Durham and Pickering in general, is that it is still kind of a new market compared to all of these other municipalities around. So I think we still have the chances of actually having more stability and more gains faster than the other municipalities. So basically right now we are down in sales, down in price. And how do we see this moving forward? Even month over month, when I look at it, roughly we were still seeing about a 1% decline in average prices across Pickering and the Durham region. The interesting thing is that over the past few weeks, I've been keeping an eye on inventory like I usually do. So when we come out of a quarter, what ends up happening is that we usually have a couple of thousand listings drop off of the MLS system. But then a week later, we pretty much see it climb right back up. So we were like over 30,000 listings at the end of September, and we obviously dropped down October 1st, and then I thought that we are not picking up all of these because of the Thanksgiving holiday. People are going to come to the market after that, and I'm very sure that in the last 2 weeks we're definitely going to hit over the 30,000 listing mark, but we never actually did. So that goes to kind of show that, hey, our inventory is not spiking. It hasn't spiked yet, but at the same time our sales are starting to pick up. An interesting analysis that we actually did was looking at our third quarter sales and looking at where these transactions actually came from and who was motivated to buy and who actually completed transactions. And one of the cool things that we actually saw is that it was a lot of first-time home buyers that we had in the mix. That is something that we actually haven't seen in a really long time. I actually really like to see that because that starts to show me that there is going to be more stability in the market. Number one thing is that you have people that are first-time home buyers that feel comfortable entering the market, whereas they were not entering the market before, whether it was out of uncertainty or affordability. But right now you are getting the first-time home buyers coming in. Granted, they are buying mostly condos and whatnot, but that's actually a very good thing. And that goes to point two. See, when we have these first-time home buyers coming in and they're buying these condominiums, they're buying the condominiums. The person that owns the condominium likely is going to go into a freehold townhouse or maybe a single car detached, and that person that owns that townhouse or a single car detached is likely going to be scaling up to a detached double car garage home. So that shows the evolution in kind of real estate. So we are starting to see that. We always need first-time home buyers in the mix in order to move our market forward. And so that was a really good sign that showed us that, hey, our market is still moving forward. Now, what we've seen already from the Bank of Canada is two rate reductions already. Maybe by the time this comes out for October 28th, we're probably already going to see another decrease. But at the same time, what we saw is the core inflation go up from 1.9 to 2.2 or 2.4%. So that was a pretty big increase in core inflation, mostly driven by groceries and the slower decline in gas prices. But I think their language is going to change. They're going to start to say, hey, they're not going to promise any further rate decreases or what's going to happen. I think their stance is going to be let's see how this plays out. Let's evaluate the numbers in the next 6 weeks, and we will say something further from there. So I think that we'll probably see the quarter point come down, but then also I think that they're going to be very quiet and blank about what's going to happen next. And I think that's not because they don't want to say anything, but they have no idea of what's going on. Pretty much just like most of us. One thing I can say for sure is that real estate, in my opinion, has kind of gotten out of control in the sense of and it's been happening for a while. Like we've used it as a big investment tool versus what its primary purpose is, which is shelter. And when I talk to people about this, especially the younger people coming into the market, and they're having a hesitation coming into the market due to the cost, or basically saying, hey, I'm going to have to sacrifice X, Y, Z. The rent is going to be cheaper. But what I really try to tell people, and I don't know if I'm driving home the point or if there's a better way of communicating it, is yeah, sure, you could go rent right now, but there's gonna come in your time in your life where your earning potential is not gonna be there anymore. You're not gonna be able to have an income. And we all kind of know how CPP is going right now, right? Like, I don't know if there's gonna be anything left in CPP when I go to retire, so I'm not banking on that. So if your biggest expense is gonna be shelter, what is the best move for you? I would say that even if you cannot afford to buy a place right now, I would still use it as a future shelter potential for yourself. So what do I mean by that? Like, we've come across somebody right now that is interested in a new project. Like, I would say Pickering City Center, like that condominium building that's going in there. I know it sounds crazy to think about investing in condos right now. I still think it's a good purchase. At some of the rates that we could get these units at, I still think it's a good purchase. So for somebody that is just trying to get into the market but still can't afford to service that cost on a monthly basis, this is what I would say. I would say, hey, the deposit structure on some of these places is quite long, like 2 years, maybe a little bit north of 2 years, okay? Spread out your deposit, work towards making this deposit. You're gonna have 20 points into it. It's gonna be a forced savings. Once you have something like this going, you're gonna be putting money into it, you're gonna be motivated, and you're gonna be putting money in the right place, okay? So that's one thing. The second thing is that when you get that place, maybe if you buy a 1-bedroom, your cost on that is gonna be $2,400 or $2,500 a month, maybe less than that, and maybe your rent is only gonna be $2,200. So guess what? Out of pocket, you're gonna be like $300 or $400. But when you're putting that $300 or $400 a month out of pocket after you've rented out, because you don't need to live there, maybe you're comfortable staying where you are at right now, and maybe you can't afford to float that. But when you rent it out and you're putting in that money is actually, if you look at an amortization table, all of that money is still coming back into your pocket. So what are you doing at this point? You're paying down that, you secured a unit. You're paying that condo down with somebody else renting it. You're creating a forced savings for yourself. And guess what? At some point, you're gonna have some money there, whether it's gonna be for your shelter or whether that money is gonna come back in an equity form so you can move yourself forward. So I wanna look at it in this sense of saying, hey, it's a long-term plan. That's what I've always said about real estate. It's a long-term plan. Now, guys, this is supposed to be a market update, not me lecturing you on how to kind of get into the market and what real estate is supposed to be used for. How do we see the market moving forward next year? I think we're gonna see more or less a repeat of what we saw this year. A lot of uncertainty in the marketplace. We might see rates come down a little bit more. And I'm not even concerned about the rates at this point so much, because the thing is that when we're getting rates at just below 4% at this point right now, I think we're at a good spot for rates. When rates were at 6 or 7%, that's when I was getting pushback from people saying, hey, rates are too high. I'm not hearing that anymore. Sure, if it goes down another quarter or another half point, is it gonna be helpful? Absolutely. But I don't think that's the key driver of the market. Some people will get motivated, but I don't think that the rates are that bad. I still think that what's gonna happen next year is that hopefully we start to see just the transactions pick up. We might still see a little bit further of a price decline, and depending on what area you are in, you might even see more of a price decline. If you're in the downtown condo market, in that 416 condo market, I don't know, like the amount of inventory that is out there right now is quite a lot on the resale market, and we still haven't seen the full extent of the new condo construction hitting that market yet. Because the people that bought with that intention over there, they had a different intention when these deals were signed. They were expecting huge price appreciations, low interest rate, and high rents, and that's just not the case right now. So I can expect that a lot of these units are still going to hit the market. So if you're in that kind of a market, you might be getting better deals there. And if you're on the seller side, you might be getting hurt on that side. But there are other markets. Like, I keep talking about Durham and Pickering and Ajax and whatnot, because I still think that when you look at the value over there, the value is still there. Especially when we look at it from the perspective of shelter, it really, really makes sense. So I think that number of sales next year, we're probably going to see improve, probably not so much on the price. And then moving forward, even beyond 2026, I think that we're going to kind of see a similar type of thing, but we might just start to see price appreciation slowly going up. I don't think that this whole tariffs thing and whatever else, it can last like years and years and years. Something's going to have to change. Just like what we've seen here recently, where China doesn't want to buy oil from certain places. They're buying more oil from Canada. Slowly, we are seeing that we are interacting and doing more business deals with other parts of the world since the US has kind of shut us off. And I'm not blaming the US. We've done a video on this. I think that that's perfectly fine if that's the way that they want to behave. And if Canada is getting hurt, we rightfully should be getting hurt, because we have put so much of our eggs in the US basket. And now is the time for us to try to figure this out. And I'm hoping that slowly we're figuring this thing out, and we're going to become a little bit more diverse with who we're trading with. And in case something like this ever happens happens again, at least we're not going to be stuck 80% or 90% on one side. We are going to have a little bit more of an equal spread, and maybe we won't be financially or economically impacted the next time around. Hopefully this has added some context of what's going on to the market. If you guys have any questions, because we are really area specific about what's happening in the market right now, I'm more than happy to give you an insight. If you want to talk about Milton or Brampton or Newmarket or whatever, I'm more than happy to give you guys some insight of what's happening in your area. Shoot me a DM, give me a call, click the link below, and let's set up a quick 15-minute meeting. Until next time, guys, remember one thing: get Cabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.